Today, we're talking mortgages. Have you ever dreamed of owning a home or delving into the real estate business? If so, a mortgage is likely a big part of the conversation. But what is a mortgage? How do you get one? And how do you ensure you found the best mortgage lender for you? I'll explain. A mortgage is a type of loan used to purchase property. For the sake of this video, we'll focus specifically on home mortgage loans. When you take out a mortgage with a lender, you borrow money to pay for a house. Like with any other debt, you repay this loan over time plus added interest. Lenders will determine your interest rate and the amount you're eligible to borrow based on your credit profile. The value of the house you're trying to purchase will also factor into your lending potential. Most loan terms, or the amount of time you have to pay back a mortgage loan, land somewhere between 15 and 30 years. Finding the right lender is a key part of securing the right mortgage loan for you. Here are a few tips to consider when choosing a mortgage lender. Check eligibility. Different lenders may have varying requirements for potential borrowers to meet, especially with regard to things like credit scores. Some lenders are more forgiving than others when it comes to your credit profile, so be sure to compare lenders and pick one that fits well with your financial needs. Take note of rates and fees. Comparing interest rates across lenders is a great place to start, but also keep other lender fees in mind and choose based on what you think you can afford. A lender's posted annual percentage rate, or APR, often includes interest charges and other lender fees. Know your preferred application process. Would you prefer to complete your application online or in person? Answering this question can help you narrow down lenders based on online access or what branches are available near you. Keep tabs on services. Do some research on a lender's customer service record. Are they available for customer support 24/7? Will you be able to make payments online? You'll also want to see if a lender you're considering sells your loan after closing, which could leave you with a different service entity to deal with entirely. If you're ready to get a mortgage loan, here are some steps to make it happen. Budget, save, and improve your credit. The cost of a home will include things like a down payment, closing costs, and other moving expenses, so you'll need to budget for all of it. Also, the higher your credit score, the easier it may be to qualify for a better loan with better terms. Compare mortgage types and research lenders. There's more than one type of mortgage, and lenders abound, so you'll want to do your research to find the right fit for you. Get pre-approved. Applying for pre-approval on a mortgage can give you an idea of how much house you can afford and what your loan terms and conditions may be. Submit a formal application and prepare for underwriting. Your mortgage application will include a hard credit check and the submission of documents confirming things like your income and identity. Underwriting includes your lender's hard look at this information, plus an appraisal for your property's value. At the end of this process, you'll get a final decision on your approval. Closing. Upon approval, you'll need to sign relevant documentation, pay closing costs and other final fees, and sign up for any relevant insurances. To learn even more about mortgages, including different types of mortgages, or how much income you need to afford a home of a certain cost, check out Newsweek Vault.